All right, inflation in South Africa has cooled considerably. According to Stats SA, last month inflation increased by just 2.8%. That's a rate at which prices are going up. It is a big drop from the 3.8% recorded in September. Now, two important points here. The first is that this is well below the Reserve Bank's mid-range of 4.5%. Secondly, it is the lowest inflation that we have seen since June 2020, when we were in the midst of the COVID outbreak, the best that we've seen in more than 4 years. Well, South Africa's inflation outlook will be studied by the Reserve Bank's Monetary Policy Committee. And there you can see the trend coming down to 2024. Tomorrow, Lesetja Kganyago will announce whether the bank has decided to reduce interest rates in South Africa. Economists expect the MPC to reduce the repo rate based on this by at least another 25 basis points, or a quarter of a percentage point. If that happens, it would be the second rate cut that we've seen. The first one was in September this year. It is the first time rates are falling in 4 years, and you can see that trend in line with inflation finally coming down to give the Reserve Bank scope. If the Reserve Bank does cut interest rates by 25 basis points tomorrow, let's see what that means. If you are a homeowner, you'll have more cash in your pocket. So on a home loan of 1 million rand, the savings will be around 171 rand a month. On a home loan of 2 million, you'll save 344 based on the prime lending rate. It is currently 11.5%, but could drop to 11.25%. On a home loan of 5 million, you will save 858 rand. That's more in your pocket every month. So this is very big news for indebted consumers, at least. Let's bring in Chief Economist at Citadel Investment Services. That's Maarten Ackerman. Mr. Ackerman, thank you. What's bringing inflation down, finally?
Yes, good evening. I think we need to keep in mind that this was a big move from the energy component, from oil, petrol. So for the last year, we saw a 20% decline in terms of that component in the inflation basket. So that is also a risk, because going forward there is going to be a low base effect. So if you think about what happened to the rand over the last year, the rand strengthened a lot. So measuring back to last year, this time we're sitting with a stronger rand. And also the oil price is lower, and that contributed to that 19% decline in the fuel component. Food inflation also came down a little bit, but the major reason for this huge decline to 2.8% is fuel related. If we exclude fuel and food, and we look at core inflation, we're still sitting at about 3.6. To give you an indication that it is a very volatile component like petrol that is actually causing this decline at the moment.
All right, so if it's dependent on lower oil prices and a stronger rand, is inflation sustainable at this very low level? Very good news for many.
Yeah, I think so. Talking about the Reserve Bank tomorrow, they typically look forward, they don't look backward. So they will look at data dependency, and they will definitely take into account that we're already starting to see the rand slipping again. For now, the oil price is stable, but with the issues in the Middle East, who knows where that can go. So I do think inflation is not going to stay below the 3% lower end of the target range. It is definitely going to creep back in the months to follow, just from the base effect that we've seen. And when they take that into account, there's no guarantee that they might be giving us a 50% cut just before Christmas. So probably stay on the cautious side with 25 basis points.
So you've preempted my next question. So tomorrow you believe a quarter of a percentage point is coming the way of indebted consumers?
Yeah, well, if we go back to the previous meeting, that was just after the US central bank cut rates by 50 bips. That gave them a great opportunity to follow with a similar cut. But again, looking forward, they probably also saw a bottom in inflation, which is now playing out in the real numbers. But they are concerned about the what they call the pass-through effect going forward, and they decided on that 25 basis points. And I think where we are right now with the potential that we get back into the target range, they will probably stay with a 25. That is our view at this point.
Will the Reserve Bank also be thinking about Donald Trump coming in and the global outlook, some fearing that his policies will lead to more inflation? Is there a consensus on what the outlook with regards to inflation is for the next 6 to 12 months?
Yeah, so I think, if you think about the Trump policies, there's a long list of those, but the three major ones are trade policies. That is growth negative. I'm talking US, and it is definitely upside pressure on inflation. Same with immigration policies in the US, growth negative and upside pressure on inflation. So it's only fiscal that's slightly positive for growth, but also inflationary. So if you're sitting with inflation, potential inflation, sticky inflation in the US, that implies that the US central bank is probably going to cut less and slower than most people expect. And we know that, we need to keep that differential with the dollar or the US interest rates. Otherwise, we get the impact later on. So unfortunately, those policies can also imply that our interest rates will keep going down, but probably much less and slower than most people want or expect at this point in time.
All right, so for indebted consumers, it is a Christmas present, maybe not as big as 0.5 percentage point. What about people who are retired? We often forget that there are people in this country with money in the bank. How serious are the cuts that have begun for them?
Yeah, so there's two sides to this coin, as you said. So people that want to actually get into the market, buying a property, buying a car, this is not great news. A little bit of relief, like you showed earlier on, in terms of what you save. But, to really help those consumers, we probably need to see rates come down a little bit more. For the savings community on the other side, whether that's just a pension or anybody with some savings amount, there we're very blessed because, we're sitting with still very high interest rates. But now if you look at inflation at, call it 2.83%, whatever that number is, we got some of the highest real yields in the world. So without taking any risk, and I'm ignoring tax for the moment, where you pay tax on the interest, it's a great environment for savers to make sure that, they protect their capital, but also they beat inflation with a very healthy margin. So at least the savings community in South Africa at this point is benefiting from both sides, low inflation and then still slightly higher interest rates.
All right, good news for both. Thank you. Chief Economist at Citadel Investment Services, Maarten Ackerman, saying a 25 basis point cut tomorrow. We'll bring you that meeting live, what the Reserve Bank says after the meeting of the Monetary Policy Committee. Here is a look at your main financial indicators.